Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Marathon Digital Holdings Incorporated, stock ticker MARA. So here we can see that the stock is trading under a fair amount of selling pressure here. And we're starting to break some fairly significant support levels in the process. But there are some kind of surprises in this chart that I think that some people might be missing. So if we take a look here and sort of zoom in a bit, we can see that the declines have been fairly extreme here so far. After posting highs just near 2730 during the July 17 trading session, we have managed to really force some significant lows here, all the way down to 2150 during the most recent trading period. This was really the Friday close, although we did close at 2165. The lows for this final hour of trading did come in a bit lower. So here we can see that, we have some Fibonacci analysis done here. And the way that we're measuring this is to use the price lows, which came in during the July 10 trading session, posting at 1879. And then, of course, those highs from the July 17 trading session coming in at 2730. So if we're looking at this basic trend movement here, this bullish price wave, we can see that prices fairly quickly broke through the 23.6% Fibonacci retracement. That's this red zone here. And then we did see a bit of a bounce, but then this 38.2% Fibonacci retracement did also give way quite quickly. That level came in at 2406. So from there, there was a bit of an increase in downside selling pressure, and we can see that increase in momentum in the relative strength index, which does show a very clear trend to the downside for the overall share price momentum. So, given that this route here was extending to the downside, it's not totally surprising to see that some of these other Fibonacci levels have also been broken. We have broken through the 50% Fibonacci retracement, as well as the 61.8% Fibonacci retracement, which rested just above $22 per share. So currently, really the only thing that's holding this stock up from testing this final Fibonacci level is really this 200-period exponential moving average. We can see that in the blue line here. I can kind of zoom in on that a little bit. So here we can see that share prices are kind of finding some support here. But a downside break from this level would be significant because it would essentially mean that the stock has broken below its entire exponential moving average cluster. In addition to that, we can see a few negative crosses here in the EMAs, in the exponential moving averages themselves. So specifically what I'm pointing to is this yellow line here crossing below the orange line. That on its own is a bearish signal. So with all of these things together, it's really not surprising to see that share prices are moving lower here. However, there are reasons to believe here that that the share price, the declines in share prices might be reaching a point of completion. So specifically, what I would point to mostly would be found in the relative strength index. That's in this purple line down here. So specifically, what I would be looking for here is for the share price itself to be moving into oversold territory, which it's essentially doing at the moment. We didn't quite get there but we're within not even 1 full point away from oversold territory. In the relative strength index, the scale goes from 0 to 100, and readings below 30 would be considered oversold. We nearly got there. I think we're at 30.50, something like that. So we're essentially, we're very close to being in oversold territory, and any further declines from here would send the stock into that region. So this would suggest that this current downtrend has likely run its course, and is most likely to start reversing higher. In addition to that, I think what people are probably missing here is the fact that this negative momentum reading here that we're seeing in the relative strength index is a fairly extreme reading. Its slope is extremely drastic, and it's generally not. Uh, these types of slopes are generally not sustainable. So to the down, and this would be true even if it was in the positive direction. This is a fairly extreme slope in this trend line here, so it would not really take much to roll over out of here and then to officially break that trend line here. So while we are still showing a negative trend, a little bit of a rollover here out of oversold territory would break this downtrend and share price momentum fairly quickly. So people that are kind of betting on this stock are hoping for a short sell position to continue sending share prices lower. I think the scope for that is relatively small. Could we continue to see some declines here? Possibly, but currently we're already running into the 200 period exponential moving average, and it is starting to look like this downtrend in share price momentum is unlikely to maintain itself for much longer. So I would be worried more about establishing short positions right here rather than long positions. I think that the possibility of an upside reversal here far outweighs the potential for continued downside declines. So, looking at the possible worst case scenarios here, if we were to see a break below this 200 period exponential moving average, I would expect to start seeing support near this 786 retracement, the 78.6% Fibonacci retracement of this prior move that was mentioned earlier. This level comes in at roughly 2060. So if we did see a share price decline into this area, that would be roughly $1 more in declines. I would definitely start to be a buyer of this stock. I would definitely start to view this current trending move as probably reaching a point of completion. And unlikely to extend much further. I mean, if I had to bet on one side or the other, I would definitely be looking to buy on dips rather than to continue to try to sell this downside momentum that's probably unlikely to sustain itself. So currently, these are the levels that I would be watching. To the top side, I would expect resistance to start coming in at roughly 2330. This would be an old support zone that would now be expected to work as resistance. So if we do see a break above here, I would expect that to start taking pressure off of the downside. So here's the current market analysis for Marathon Digital Holdings Incorporated, stock ticker MARA.